What if you could take a simple $100 bill, what many of us might spend on a night out or a couple of subscriptions, and turn it into $1,000? In most of the investment world, that sounds like a total fantasy. A 10x return is the kind of thing legends are made of. And yet, some of the world's most forward-thinking analysts and financial institutions are saying that a small strategic investment in Bitcoin today could be on a path toward that exact 10x return by the year 2030. Now, before you click away, this isn't some get-rich-quick promise or a guarantee of any kind. What we're going to do is look at the numbers, the major catalysts, and the specific price milestones Bitcoin would need to hit for that to happen. We'll look at projections from firms like ARK Invest, hear what prominent investors are saying, and lay out exactly what has to go right for your $100 to become $1,000. We're not selling hype, we're analyzing a potential roadmap. Let's be real for a second. You've got $100 you want to grow. In the traditional world, what are your options? For decades, the safe play was to just let your money sit in a savings account. That's great for an emergency fund, but as a way to build wealth, it's a total non-starter. With inflation constantly chipping away at your purchasing power, a savings account is usually a losing battle. Your money's safe, but it's not actually. Okay, so what about the stock market? It's a fantastic tool for long-term growth. You could put your $100 into an S&P 500 index fund, which is a slice of the 500 biggest companies in the US. Historically, that's been one of the most reliable ways to build wealth. But turning $100 into $1,000 there, that's a 900% gain. While the S&P 500 has had some incredible runs, a 10x return in just 5 to 7 years is incredibly rare. It happens over decades of compounding. Sure, but if you're looking for more explosive growth potential, you have to look at assets that play by different rules. And that's the bottom line. Traditional investments are built for steady, predictable, but slower growth. They aren't designed for the kind of exponential jump we're talking about. This is where the conversation pivots to a completely different kind of asset, one with a unique set of properties that give it a shot at a very different outcome. This is where Bitcoin enters the picture. To see how $100 could become $1,000, we need a starting point. Let's imagine it's late 2025. Bitcoin's price has been on a roller coaster, with forecasters eyeing the $100,000 mark as a huge psychological barrier. For the sake of clean math, let's use that as a hypothetical entry point. Let's assume you buy Bitcoin at a price of $100,000 per coin. At that price, your $100 investment gets you exactly 0.0001 Bitcoin. It doesn't sound like a lot, but that fraction is your stake in the entire network. That 0.01 BTC is the key. For your $100 to become $1,000, the value of that 0.01 BTC has to hit $1,000. And for that to happen, the price of one single Bitcoin has to reach $1,000, $1,000. $1 million a coin. It's a number so big, it still sounds a little ridiculous. For years, it was a fringe idea, laughed at by mainstream finance. But today, it's a figure being seriously modeled by some very respected names. Investors like Cathie Wood of IRK, Invest and Block founder Jack Dorsey have both stated that $1 million Bitcoin is possible by 2030. While major firms like Fidelity haven't issued a formal price target, their digital assets team has published extensive research on Bitcoin's long-term potential and different valuation models. So, the question is shifting from if it's a crazy number to how we could possibly get there. This journey to a seven-figure valuation isn't just based on wishful thinking. It's rooted in three fundamental forces that some analysts believe could create a perfect storm for Bitcoin's price. These are the engines that could drive it to that milestone. First is the supply shock. Unlike government-backed currencies like the US dollar, which can be printed without limit, Bitcoin has a fixed, hard-coded supply of just 21 million coins. That's it. Forever. This absolute scarcity is why people call it digital gold. But it gets even more interesting. Approximately every 4 years, an event called the halving cuts the amount of new Bitcoin being created in half. The next halving is expected sometime around 2028, and it will squeeze the flow of new supply even further. Historically, the periods after a halving have seen significant price growth, as steady or rising demand crashes into a shrinking supply of new coins. Second, we have the demand shock. For most of its history, buying Bitcoin was complicated and seen as niche. That all changed with the approval of spot Bitcoin ETFs in the US. Suddenly, trusted giants like BlackRock and Fidelity were offering a simple way for anyone with a brokerage account to get exposure. This has opened the floodgates for new money, and while a lot of that initial flow came from everyday investors, the real tidal wave could be next: pension funds, endowments, and corporate treasuries. In one of its reports, ARK Invest modeled scenarios showing that if institutional investors were to allocate a mid-single-digit percentage to Bitcoin by 2030, it could be a major driver toward their bull case price target. And third, there's the macroeconomic environment. In a world where governments keep printing money and people are worried about inflation, Bitcoin positions itself as a powerful alternative. It's a global permissionless network that no single person or government can control. For people in countries with unstable economies, or even just for those in developed nations looking to protect their savings, Bitcoin is increasingly seen as a financial lifeboat, a hedge against the flaws in the traditional system. Alright, next up we're going to map out the exact milestones Bitcoin would need to hit on its journey to $1 million. If you're getting value out of this breakdown, do me a favor and hit that subscribe button. It's free, it really helps the channel, and you won't miss our next update on how this story unfolds. So, with those three drivers in mind, let's chart a hypothetical path from your $100 investment to a $1,000 return. Remember, your key is that you hold 0.001 BTC. Our first big stop is milestone 1, the 2x. Your $100 becomes $200. For this to happen, Bitcoin's price needs to hit $200,000. This is a target that a number of analysts believe is possible in the near term, perhaps by the end of 2025 or into 2026. Citing the massive impact of ETF inflows, analysts at firms like Standard Chartered and Bernstein have put out research suggesting targets in the $150,000 to $200,000 range for 2025. This would be a new all-time high, proving that the first wave of institutional demand is having a profound effect. Next up is milestone 2, the 5x. Your $100 becomes $500. Now things are getting really interesting. For your investment to 5x, Bitcoin's price has to reach $500,000. Getting to this level would likely require Bitcoin to graduate from being an alternative asset to a significant global store of value. This is the stage where we could see larger institutions, maybe even smaller countries, making serious allocations. A $500,000 Bitcoin would have a market cap in the trillions, putting it in the same league as the world's biggest companies. Many long-term bullish projections see this as a plausible target for the 2028 to 2030 timeframe. Finally, we arrive at our destination. Milestone 3, the 10x. Your $100 becomes $1,000. The magic number we need to see is a $1,000 price per Bitcoin. This is the bull case scenario where Bitcoin has cemented itself as digital gold 2.0. At this valuation, its market cap would be rivaling that of actual gold. This is the outcome laid out by people like Cathie Wood, whose firm ARK Invest has published bull case scenarios of over $1.5 million by 2030, based on Bitcoin capturing a major share of the global store of value market. Tech visionaries like Jack Dorsey and Coinbase CEO Brian Armstrong have also spoken about $1 million price being a real possibility by 2030, citing institutional demand and growing regulatory clarity as key drivers. Okay, we absolutely have to ground this conversation in reality. This path is a bullish projection. It is not a guarantee. Bitcoin is, and likely will be for a long time, an incredibly volatile asset. You should expect massive price swings. Sharp pullbacks of 20–30% in a short period are not just possible, they're completely normal for this market. Beyond price swings, there are other risks. The regulatory landscape is still taking shape, and a harsh government crackdown could definitely impact the market. There are also technological risks and the constant threat of market sentiment turning on a dime due to some unforeseen event. This is why the golden rule of crypto investing is to never invest more than you are willing to lose. The smart way to look at this is to treat a small $100 investment as a high-risk, high-reward lottery ticket inside a balanced portfolio. It's a small bet on a world-changing technology, not a guaranteed path to riches. It's also important to remember that this simple math doesn't factor in things like transaction fees or capital gains taxes, which would naturally lower your final take-home return. So, can you turn $100 into $1,000 with Bitcoin? The math says it's possible, and the roadmap laid out by some bright minds in finance suggests the catalysts are in place. The combination of a fixed supply, a potential demand shock from big money, and a shaky global economy has created a unique and compelling case for Bitcoin. The journey to $1 million Bitcoin, if it happens, won't be a smooth ride. It will be volatile, with breathtaking highs and stomach-churning lows. But for those who understand the core drivers and are ready for that volatility, a small strategic investment today has the potential for a kind of return that is almost impossible to find anywhere else. The path from $100 to $1,000 isn't a sure thing, but it is a possibility rooted in a powerful economic story that's still unfolding. The next few years for Bitcoin will be fascinating to watch.